As the world of finance can be a complex and confusing place, it's understandable that the idea of a bank crisis can be daunting. However, it's important not to shy away from the reality of tough times and instead prepare ourselves for any unexpected circumstances that may arise. Throughout this video, we'll delve into 10 strategies that can help you prepare for and navigate through tough financial times. Strategy 1. Diversify your assets. Let's start with the basics. Understanding the various types of investment assets is crucial. From stocks and bonds to real estate and precious metals, each asset class offers unique advantages and drawbacks. Diversifying across multiple asset classes allows us to create a well-balanced portfolio that is better equipped to withstand any financial turbulence. Moreover, diversification within asset classes is just as important. Investing in a range of stocks from different sectors and industries provides greater protection than investing solely in one company or sector. Similarly, diversifying within bonds can help spread out risk and create a more stable portfolio. However, the benefits of diversification go beyond risk reduction. By investing in a variety of assets, we may also increase our long-term returns. This is due to the fact that different asset classes tend to perform differently in various economic conditions. By diversifying our portfolio, we can take advantage of these market fluctuations and create a portfolio that is optimized for growth. Strategy 2. Keep liquid assets. Keeping some of our assets in liquid form can offer several benefits. Firstly, having quick access to cash can be crucial during unexpected expenses or a financial emergency, especially when traditional banking services are limited. With a portion of our assets in liquid form, we can have peace of mind knowing we have the means to cover any immediate financial needs. Secondly, liquid assets can provide us with the flexibility to take advantage of investment opportunities that may arise. In times of economic uncertainty, asset prices can fluctuate significantly, creating potential buying opportunities for astute investors. By holding a portion of our assets in liquid form, we can be ready to capitalize on these opportunities when they arise. However, it's important to keep in mind that relying too heavily on liquid assets can have drawbacks as well. These assets often yield lower returns compared to other types of investments, such as stocks or real estate. Additionally, excessive cash holdings can expose us to inflation risk, which can erode the purchasing power of our cash over time. Therefore, it's important to maintain a balanced portfolio that considers both liquidity and long-term growth potential. Strategy 3. Use multiple banks. Diversifying our banking relationships by using multiple institutions can be a smart move in times of economic uncertainty. By spreading our assets across different banks, we can reduce our overall risk and increase our sense of financial security. One of the main benefits of using multiple banks is that it can provide greater flexibility in accessing funds. If one bank experiences a freeze on withdrawals or other limitations, we can still access our funds from other institutions. This can be especially crucial during a crisis when timely access to funds is critical. Another advantage of using multiple banks is the ability to manage risk. By avoiding concentration of assets in one institution, we can mitigate the impact of any single bank failure on our overall portfolio. This can help to protect our assets and minimize losses during a crisis. However, it's important to keep in mind that using multiple banks requires careful planning and research. We should choose reputable institutions and avoid those that may be at risk of failure. Additionally, we should understand the fees and interest rates associated with each bank to optimize our banking strategy and maximize our returns. Strategy 4. Avoid large bank deposits. One of the main reasons to avoid large bank deposits is the risk of bank failures. If a bank fails, depositors may lose their funds that exceed the insured limit. This can be a devastating blow, particularly for those who have placed a significant portion of their assets in a single institution. Another risk associated with large bank deposits is the potential for account freezes. During a crisis, banks may freeze accounts as a means of limiting withdrawals and protecting their own assets. This can leave depositors without access to their funds and can cause significant financial hardship. Additionally, large bank deposits can also be vulnerable to inflation risk. As the value of money decreases over time due to inflation, large deposits can lose value and erode our purchasing power. Strategy 5. Explore alternative banking options. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. One alternative banking option to consider is credit unions. Credit unions are not-for-profit financial institutions that are owned and operated by their members. They often offer lower fees and better interest rates than traditional banks and can be a good option for those looking for a more community-oriented banking experience. Another alternative banking option is online banks. Online banks offer the convenience of 24/7 access to funds and can often offer higher interest rates than traditional banks. They can also be a good option for those looking to avoid the risks associated with large bank deposits, as many online banks are FDIC insured. It's important to note that exploring alternative banking options requires careful consideration and research. It's important to understand the risks and benefits associated with each option and to choose reputable institutions that are trustworthy and reliable. Strategy 6. Invest in gold or other precious metals. Investing in gold or other precious metals can be a valuable strategy for protecting your assets during a bank crisis. Precious metals have been a store of value for centuries and can offer a reliable hedge against inflation and economic uncertainty. One of the benefits of investing in gold or other precious metals is their inherent value. Unlike fiat currency, which can be subject to inflation and devaluation, precious metals have a tangible value that is widely recognized and accepted. This can provide a sense of security and stability during times of economic turmoil. Another benefit of investing in precious metals is their portability and liquidity. Unlike other assets, such as real estate or artwork, precious metals can be easily bought and sold on the open market. They can also be stored in a variety of secure locations, including vaults and safety deposit boxes. It's important to note that investing in gold or other precious metals does come with risks. The price of precious metals can be volatile and can fluctuate based on a variety of factors, including global economic conditions and geopolitical events. It's important to do your research and understand the risks and benefits associated with investing in precious metals. Strategy 7. Consider cryptocurrencies. In recent years, cryptocurrencies have emerged as a popular alternative to traditional banking and investing options. While cryptocurrencies like Bitcoin and Ethereum can be volatile and carry certain risks, they also offer unique benefits that can make them a valuable addition to any bank crisis survival kit. One of the primary benefits of cryptocurrencies is their decentralized nature. Unlike traditional banking systems that are controlled by a handful of large institutions, cryptocurrencies operate on a decentralized network that is not controlled by any single entity. This can make them more resistant to economic instability and government interference. Another benefit of cryptocurrencies is their ease of use and accessibility. Cryptocurrencies can be bought and sold on a variety of online platforms and can be used to make purchases and payments in a growing number of establishments around the world. They can also be used to transfer funds internationally quickly and inexpensively. It's important to note that investing in cryptocurrencies comes with certain risks, including their volatility and potential for fraud. It's important to do your research and understand the risks and benefits associated with investing in cryptocurrencies before making any decisions. Strategy 8. Prepare for a bank run. In times of economic uncertainty, it's crucial to be prepared for the possibility of a bank run. To do so, having a well-crafted plan can be a game changer. This involves scouting alternative banking options such as credit unions or online banks, and having a contingency plan in place to transfer your funds if necessary. Additionally, having a stash of cash on hand can provide a safety net in case traditional banking services are disrupted. Remaining informed and vigilant is also key. Keeping a close eye on news updates and government announcements can help you stay on top of any developments and make informed decisions about your finances. Paying attention to early warning signs of instability in the banking system can also help you take proactive measures to protect your assets. Perhaps most importantly, staying calm and collected is crucial. A bank run can be a stressful situation, but panicking can lead to hasty decisions that may ultimately harm your financial well-being. By having a solid plan and keeping a level head, you can feel more confident in your ability to weather a potential bank crisis. Strategy 9. Keep important documents safe. Amidst the chaos of a bank crisis, safeguarding your valuable documents is as critical as securing your financial assets. Vital records such as wills, birth certificates, and passports should be protected from any harm or loss. One effective method of keeping these documents safe is to invest in a fireproof and waterproof safe. This ensures that they remain unscathed and secure, even in case of natural calamities or accidents. As an additional layer of security, it's also wise to store digital copies of your documents in a password-protected online storage account. Another strategy is to have copies of these documents stored in multiple locations. For instance, you could have one set of documents in your home safe and another set in a safety deposit box at a trustworthy bank or credit union. This provides an extra level of assurance that you can access your documents even if one of the storage locations becomes inaccessible. Strategy 10. Stay informed. As with any financial crisis, it's crucial to stay informed and up to date on the latest developments during a bank crisis. This can help you make informed decisions about your finances and take action if necessary. One strategy for staying informed is to follow reputable news sources and government announcements. This can help you keep track of any new regulations or policies that may affect your finances. Additionally, consider attending financial education workshops or seminars to learn more about managing your finances during a crisis. Another strategy is to communicate with your financial advisors or trusted professionals. They can provide valuable insights and guidance on how to navigate a bank crisis and protect your assets. Additionally, consider joining financial communities or forums to share information and learn from others. Finally, it's important to stay vigilant and monitor your accounts and transactions closely. Keep an eye out for any suspicious activity or unauthorized transactions and report any issues to your bank or financial institution immediately.